KLKMIGENTE, it's Stanley King, aka Mr. Moves. Welcome back to the Money Moves Investments YouTube channel, the best algorithm team in the world. Ya tu sabe. In this video, we're gonna go over how to trade support and resistance like a gangster. Cause that's, if you're not doing nothing like a gangster, then what is you doing? You feel me? We're gonna learn how to properly identify different support and resistance levels, how to trade off of them, how to be profitable with them, all of that jazz, right? Because there's a lot of support and resistance videos out there and there's a lot of fluff. So I'm gonna try my best to just kind of give you guys the best ways of seeing them, best analogies and whatever to help you kind of just see how I see the market, and hopefully that can help you with how you see the market and how you execute your trades, right? And that's it. So let's go over to the charts. All right, guys. So here we are on US 30 on the 1 hour time frame. Let's go over the basics terminology that you need to know. All you need to know when it comes to support and resistance is one is your ceiling, one is your floor. When you stand up out of the chair right now, your feet are on the floor, your head is closer to the ceiling. And basic rule of thumb, if you jump off the floor, you go up. Once you bounce your head on the ceiling, you come down, right? Buy low, sell high. That's the rule that everyone is taught. So how to identify, right? Real quick, you have your lowest point, then you have your highest point. We'll take a horizontal line, go to the highest point. This is what we call resistance. Let's make this white and a little thicker, right? And then we're going to put a text box right here. Resistance slash is also called a supply, right? You're gonna hear this referred to as supply. So your resistance slash supply zone. And what is the lowest point? The lowest point is here, and this is called the support. It's actually, move this up, and then support slash demand zone. Slash demand zone. These will also be referred to as one or the other. Resistance, support, supply, demand, right? So a few things that I want to get out the way first before we dive in deep. There are some people that are taught or are teaching what's called psychological levels or bank levels, right? And if you're new to Forex trading and never heard it before, that ideology comes from basically trading against the big banks. If you are a no-nonsense Forex trader, meaning you're an algorithmic trader learning from VP, he dives real deep into the big banks and talks about how basically the banks is what sees and can manipulate price, right? And why is that important? Because it's debunked at this point to think that on a certain price chart, you know, people say at a specific level or a specific period of levels, like every 25 points or every 50 points, price will do this, price will do that. And here's the thing, right? For example, we're on US 30 and say, you know, we're pretty much close to an all-time high over here, right? So say they always say that, you know, when price hits 35,625, it always reverses. And then it always will reverse when it hits 34,746. And then when it hits 3370, it always buys. They always say things like that, saying it always comes to this level, and then it from this level always go to this level, and then from this level always go to this level or reverse. They always come up with these rules. And here's what you need to understand. If we can see it, they can see it. And what I try to teach whoever, you know, is in my mentorship is that we're not trading against the big banks. You know, even VP saying that we're trading against the big banks, really they're trading against us because they can see all of our orders. They can see that everyone's trading the 200 exponential moving average. They can see that everyone is trying to buy at this low support zone. They can see all of this. So what makes you think that they're not going to manipulate it? Even if, right? Even if, you know, let's give a faint example right here. Boom. Even if this was the mid-level, and we'll get into that in a second, and you want to sell here, and then you want to buy here, banks will do things like this. Wick you out, stop losses somewhere over here, take you out the trade, and now it'll probably start buying up. And that's just called manipulation. That's just called them taking out orders. There's buy stop orders, there's sell stop orders, and where the majority of orders are from retail traders such as ourselves, right? Retail money, people that are trading $100 accounts, $50 accounts, small people, right? They're just taking out our orders, activating them, then hitting our stop loss and going back in the direction. That's what whipsaw is. That's what long institutional candle is, or these long wicks that you get sometimes, just taking out orders. Don't over fluff what it actually is. Just trade with the market. And that's a big reason why I'm just an algorithmic trader, because I do use supply and resistance, right? I'm sorry, support and resistance. But I just trade with the momentum of the market and market structure. And that just allows me to clear my head in terms of what I am looking for in the market and not worrying about certain levels here or just overextending my brain with information that's kind of useless. So now that I'm done talking your ear off, let's get into how to identify support and resistance zones. So I just showed you, right? We got a resistance, and then we got support, supply and demand, and then I drew what's called a mid-level. A mid-level is just a level where if you have your top and you have your bottom, you just go directly in the middle, right? And just see where price has hit. So I didn't even think about it. I put a line in the middle of the chart. Now, the cool thing about SNR trading, support and resistance, is one thing you can count on, even though it's never a specific number, wherever you draw this line, price has been there before, unless it's an all-time high or all-time low, like where it hasn't been before. But if I just drew these right now and I scroll to my left, actually, we're actually at a high point. We're at an all-time high here. So let's actually give a better example, right? So let's go to EURUSD. So we're on EURUSD on the daily. Now, let's just look at what current market's at, right? Let's draw our resistance level right up top. I think I had this label earlier. Right up top, then we have our lowest. Then let's draw our mid-level. If I just go and scroll to the left, this is all places that price has been before. So now we have our two major, right? So think about this like your big cities. Think about the state that you're in the two biggest cities on the north end, the south end, and then you have that one major town that everyone likes to go to or whatever, and that's your midpoint. And then you can see that price has always been to those levels before. So what happens when price either breaks through your resistance support? Look, we go to our left, you can see every time price got to that certain line, at this example, price accumulated. And what does that mean? Accumulation just means price bunched up. Accumulation of candles, accumulation of price movement, accumulation of volume, right? Right over here, you could just see it happening over and over again every time it reaches this certain area, right? Every time. This huge zone here, over here, over here, and you can always see it. Now, when price breaks, for example, this is support. When price was around here, when it broke down, this became resistance. This line became resistance. When it broke back up, it became support. This is now resistance. When price broke through here, this became support, and then this was resistance. And then when price broke above it, it flipped, became support, and now resistance is to the next level. Now, when trading or trying to identify it, all you really have to focus on is your major points of the current market. And of course, looking back, right, will help you identify even larger points in the market, right? So if I just kind of squish the price down, I can actually find higher points that price has been, and I could probably find a lower point where price has been. And how do you identify besides just high, low? Well, rejection points. So if I just refresh my chart, boom, you can see every time price has gone to these levels, you have rejection points, wicks, right? Wicks are happening. Price hasn't broke through, wick. Price hasn't broke through, rejection, wick. Rejection, wicks, right? And I have the 200 period moving average on the screen as well. So you can see every time it has gone here. Now, here's the thing about support and resistance. You can draw lines for days, right? Rejection, and if rejected over here, it also rejected over here, right? It rejected over here. You see rejections here, rejections here. I can look at here right now and look to my left, accumulation here, rejected, rejecting here. Now, what happens when you have something like this, an accumulation from the top and the bottom? This is what we call a zone, right? And another way to identify a zone is that it's not always just a line. I see people draw boxes all the time, and you just saw me draw a box. I can replace this line with a little zone right here. And this just is an overall area where price can reject from. It's never just a certain price number or this line. It's an overall area, because you see that obviously the wick surpassed this line but rejected off this overall area. For example, right here, this wick here, if I took this whole wick and drew it across, you can see that it made this long wick here, but price actually accumulated within the box and broke down. Now, if I just go, you know, extend left real quick, you can see it did the same thing over here. Let's go to our, let's go to our left. Let's see, it did the same thing over here. And then we can just keep going and see if we can find more examples of this. And then you can see, boom, boom, price has always been here and accumulated or rejected, right? Rejected here. And this is on the daily. Price repeats itself. Where it is now, it has been before, unless it has done all times in either direction, okay? Now, there's many ways to trade off this thing. Again, I'm not a price action trader, but I do know how. So let's get into the break and retest. It's very simple, right? So look, for example, you have an accumulation, and this is what we call the box strategy, which is all one of the same of a break and retest. It's one of the same, just identifying accumulation periods where price goes into a long trend, and once the trend stops and you see a rejection, right, you can start seeing when price starts to range, it will usually continue to range, right? When you see price starting to range after a few candles and is rejecting multiple times, like one rejection, 2, 3, you can start identifying a range and then draw a box from that high and that low, which just happened to be here, or maybe even here, but here really. And then just as price keeps going, it has to break from either the top or the bottom. And while using the 200 period moving average, right, we had a better identification of where it may go. Now, let me delete this and this here. In the Forex market, you see a lot of ranging. It doesn't trend much unless you go to lower time frames. And of course, one big candle on the daily is a whole range on the 5-minute, right? But you can see that it moves sideways a lot, then trends sideways, trends sideways. So you can keep identifying these levels, right? It broke out and pulled back a little bit. That could have been a good entry to your next zone. And then you see price accumulate again, drop, broke, retest, and comes back up. Let's find some better examples. This is actually a really good example here. So accumulation happens right across this zone. Here's the high, here's the low of this zone. You look to your left, that's exactly what's happening, right? Broke down, retested. Here's your little zone right here. Retested up here with these wicks. That could have been a good entry for the rest of the sell down back to this level, right? And the cool thing about certain zone levels is that you can clone this and it will repeat itself for the most part. And if you haven't seen my ATR video, that's exactly what it is. Average range. The average range in a certain period of candles. And that's all I just identified to you with this box. It's the average range. And it will just repeat itself because that's what the market does most of the time, is range. So let's go to another pair such as GBPUSD. And we're on the daily time frame. GBPUSD, for the most part, can trend really well because a lot of people love trading it. So it does have a lot of volatility every once in a while. So we're on the daily chart. So let's identify some support resistance mid levels here, right? So we have our majors. Let's identify the major. Major low, here's your support, right? Text, support, major high, boom, resistance. Mid level, right? Let's just eye it out, right? You have the top. Here's where you can identify mid-level. You just look at the middle of the screen. Now, the cool thing about a mid-level is you don't have to necessarily draw one line. You can draw a whole zone. And this is how I usually do it. Because every time I've noticed when I draw a mid-level on any time frame or any chart, the mid-level is always just a zone. Always, because obviously that's where the most traffic is. Price has to pass through it to either get to the top or the bottom. So you're gonna have this zone, because if I were to draw a little line here, that's not going to help me. I mean, you can if you want, right? You can if you want, because for the most part, it does reject from the bottom, then it breaks up, it rejects from the top, then breaks down, rejects from the bottom. Over here, does the same thing, but it just made more sense to me from the high to the low of this area. That is my zone. So that gives me an idea of when price wants to come back down to this zone. For example, if I wanted to take a sell for here, right? I got bullish engulfings, I got crossovers, however you want to use your entry signal. Instead of overextending my position to all the way down here, I can actually safely put my position here, you know, use my ATR. Of course, check out my ATR video to know how to actually use it to properly put your stop loss and manage your lot size. Slightly above this resistance, people teach the swing low or high. And then instead of overextending my take profit, I could pretty much, you know, have a safer bet knowing that price will end up touching the top of this zone, right? Instead of putting all my money that is going to go through here and break down. Because this would allow me to do two things. Once it gets down here, this is pretty much what 1 to 2 risk reward as it is already, right? Once it gets to this level, I can start moving my stop loss to either break even or slightly in profit, take off, and then as I get more confirmation that once it enters this zone that it wants to continue breaking down, I can just continue adding to my position, securing more profits and trailing my stop loss, and then ride it back down to the next level. So why is support and resistance important? Because it just gives you an idea where price has been and where it can potentially go in the future, up or down. The price can only go 1 or 2 ways, up or down. And it's all about how you analyze the market. What are you using to analyze the market? How you're using your entry signals to identify where it can go, right? VP said it best. You can essentially flip a coin and still have proper risk management and still be okay when it comes to trading, because it can only do 1 or 2 things, buy or sell. And obviously you want to have things that give you an edge in the market. Now, don't overcomplicate support and resistance, because you can identify by a place where price has rejected off more than twice. But look at this price chart. Boom, right? That's a whole little zone here, and you can extend that to the left, and then you can also do it here. So you have your major cities and your little towns, and that's how I teach it in my course, in my old videos, right? Because if I just take this little horizontal line and you want to go off every point of price rejection, they should start plotting lines, right? Let's just go to a horizontal way. Boom, boom, boom. Let me know when you guys get dizzy. Because you can just continue drawing lines, and it's not even that it's wrong, it's just a lot. Price has been here, and if I go to the left, price has been there before. So you just want to take it to your major points of focus and understand that price is going to reject off multiple levels, and that's when you just use your box to kind of identify an overall zone, an area, a circumference of where price may go in the future, so you don't overextend yourself or over risk, or saying all this stuff. Because I could just continue style, stand left, and just go across. Price has been here before. Price has definitely been here before. Let's see, let's go to the weekly chart. It might be easier. All right, maybe this is like a low, hasn't been to in a long time, but you guys get my point, right? I'm trying to give you guys live examples, so I'm not cherry picking nothing for you, right? Because even on the daily, and I'm zoomed in, look at all these rejection points that I can identify. I can just do this. I could also do this. This is the high and low, but this is the major high. And then at this point, right, this is my midpoint, but in current market, this can be my major low, right? I could draw my major low right here, identifying this. When I look to my left, it was actually resistance at one point in time, flipped, and now it became support. Broke, retest, however you want to do your entry, bullish engulfings, it rejected off the 200, moving average crossovers, however you want to do it, and now you got up, right? And that's essentially what break and retest is. It broke out of a resistance or support from either direction, support down, retest, and comes up. For example, right here, right? Boom, broke all the way down, retested this zone right here, right around here, but then continued to break up. It broke structure. And if you haven't seen my structure video, again, go check that out. This was a long trend down, and price will always correct itself. But yeah, guys, when it comes to point of resistance, it's just identifying your tops and bottoms, and then not overcomplicating it with price levels and stuff like that. Now, I build in support and resistance into my algos, such as the Dawn, right? The Dawn has built-in support and resistance zones for you. This is showing on the daily. So if I'm on the 1 hour, just clip it.
Usually leave it still.
Right, so if I'm on the 1 hour, this is the Money Moves Dawn. You scroll down to the bottom, show support and resistance. I can show support and resistance on the same time frame I'm on, or I can show support and resistance on any other time frame, such as the daily, weekly, while staying on the same chart. And you see it does all the work for you of the major liquidation zones of price rejection. So you see the blue is your support, Then you have your resistance from the daily all the way up here. And you guys can see exactly what I'm talking about, right? And then there you go. So that's essentially built into all of our algos. I also have the money move zone out, and I actually want to give an example using this, right? So the money move zone out plots them the same way on the hourly. Now, if I use the MM zone, look at all those lines, right? This is what I was trying to show you guys earlier, a price rejection of wicks, liquidation areas that you can draw zone is. And the reason why I made this indicator the way it is because you can actually just use this to draw your boxes if you wanted to. So from here, you just gather all the red. Here's your resistance. You know, if you want, you can group these together. You can group from this to here, you know what I'm saying? And then you can just gather all of this. And if you kept doing this, obviously, you're gonna run out of price. Where do you wanna go? And I turn this off. The Forex market is a rangy market, right? And it will just keep going. Now, if I did this on something such as US 30 and I turn the zone out on the daily, let's look at the daily. You're going to have this little box. Then I can draw this as a zone. Then I can draw this as a zone. Then I could draw this as a zone, and then so on and so forth. So again, made life easier for you. Gave you guys an indicator that does this and also built it in to the systems as a, you know, good faith. But hopefully that clears up support and resistance and how you can use it, identify it, not overcomplicate it. Stop listening to, I'm gonna advise you to stop listening to the psychological levels and strict price levels, because price does not have to respect a goddamn thing, right? You know, I don't trade price action. I'm not a price action trader. I utilize it every once in a while to kind of give me some type of confluence to add to the 10 others that I have, such as right here, right? I mean, we already know that indices go up forever, but you know, once I saw this happen on the daily time frame, right? A pin bar, hammer, whatever you guys want to identify this as, you know, it's a good confirmation that we're going to continue going up. Like the next candle is going to be a buy candle, and we made money on this candle all week. So I mean that on what was it, Friday, today, right? So I mean, hopefully this makes sense. Hopefully I was able to clear that up for you, right? Support and resistance is very easy to identify, but it can also become difficult if you overcomplicate it and not use it correctly, trying to be that guy that utilizes price levels and utilizes all these other things. All support and resistance is just price, where a place where price has been and rejected off of, and then all you have to wait for is a rejection or a break, and that's it, right? Rejection, boom, break, broke down, and then you could have traded to the 200 and then took your profit and see if it broke, because in the next video we're going to show how to use a moving average and the ways that you can do it for dynamic support and resistance, you know, using it as entry signals, etc., etc. You can see here the 200 as price broke down underneath it and price touched this 200 EMA dynamically, right? It's flowing with price, it's rejecting. And if I just drew a line on this, actually let's get to horizontal way. If I just drew a line on here, boom, boom, boom. And that's just a quick example. We're going to make a video on that next. So see you guys at the camera. Hope that this helped. That was the support and resistance video. Hopefully you guys learned something. If you found some knowledge and it helped you, give me a like. Hopefully I'm pointing in the right direction. The like button is right here. I'm gonna test that out. Right over there. Like that shit. That little shit, just click it. You feel me? I needs that. You know I needs that. Do it for me. I'm doing all this for you. Do this for me. I needs that. And watch this be on the whole other side. Like, comment, subscribe to the YouTube channel, share this with your friends, send it to your grandma. She needs to know how to do this too. And yeah, man, everything about me is in the description down below. Do what you do there. 7-day free trial, access to absolutely everything. Discord, all my algorithm signals, daily calls, bots, all of this there. It's getting very repetitive. Just do it. You feel me? Peace.
Don't need me no friends. Bag on my head and they wanted me dead, but you still see me with the roof of the Benz. My bitch is bad and bougie. Ain't but a back, she don't matter to me. Super big guns like it's Call of Duty. Say this shit means, but he ratatouille.